Hey guys, what's up? This is Francisco with Valorizo Capital. Welcome back to the channel for another episode of the market update. Before we go into this episode, I just want to wish you guys a very amazing and happy Merry Christmas. I hope that you have an amazing time with your loved ones and with your family, and that also you take this time to recharge and get ready for the market, and basically also use this time to contemplate and to also appreciate all the things that you have improved in your trading journey as well. Before we jump into the market update, remember guys that we have the market is going to be closed on Monday, and we are going to have an extended weekend. So this is going to be an excellent time for us also to get prepared for the market, to do a little bit more of work, to put that time in, and also get very good at with the levels that we're going to be watching for next week, for the upcoming weeks. Remember guys that this video is going to be just for informational purposes only. It's just based on my personal opinion and it's not financial advice. Also remember that if you haven't done that already, like and subscribe. That way the channel can grow, and also more people are going to be able to find this information and use it as an asset for their trading analysis and also their investment analysis if they happen to be investors. What can you expect for this video? Well, in this video we're going to go through the major indexes. We're also going to talk a little bit about TLT. We're going to also do a little bit of analysis in the UVXY because I think it's going to be a really important chart going into next year, especially after the move that we have seen to the downside in the UVXY. We're going to go through that. And also, most importantly, the major theme of this video is going to be the expectation of another bounce in the market going into the last week of the year because of the seasonality that we tend to see after Christmas. So it's funny how the Santa rally tends actually to be after Christmas. So that's something very important for us to understand, that we tend to see that seasonality kick in right after that Christmas day, which is basically going to happen here in the weekend. So probably we're going to see that bounce going into next week, and we're going to talk about the important levels that I'm going to be watching to act as resistance, and also most importantly as an opportunity for us to jump into the short side and also participate in what is my expectation of another leg lower into the market. So welcome back guys. Let me first start right here with Apple, and the reason why I want to start with Apple is because Apple is such an important stock in the market. Even if people say that is basically just trading sideways for a year. However, given the market cap of Apple and the participation that fund managers have on this stock, this is actually a very crucial stock for the market. And what we are actually seeing in Apple are some very intense bearish signals and indications that we have in the stock. You can see that the TTM squeeze is actually firing to the downside, and you can also see that the trend oscillator has found resistance at that midline a couple of times, and now we can see that the trend oscillator is trading well considerably below that midline, which is this line right here. So that's basically a very important indication that sellers do have the upper hand right here in Apple. Also, if you want to look at the price action is confirming that, because Apple is trading below all the key moving averages, and you can see that Apple is actually consolidating below this very important level of support, which is somewhere around 135. And the funny thing about Apple is that Apple has basically been the last mega cap standing, because Tesla was one that was a holding throughout this entire bear market, but we saw that Tesla in these last couple of weeks completely broke to the downside. We already saw that in the price action. We also saw that Amazon broke to the downside, Google broke to the downside, Meta, Netflix, all those stocks already broke to the downside a while ago. But right now we are starting to see those same patterns in Apple. So that's something that we have to be really aware of, because this has been a really good measurement for how bearish the market is actually for how bearish the market actually is. So be aware of that. The expectation, my expectation is that we're gonna see some continuation to the downside, and I'm gonna be looking at Apple, so to use it a little bit of a compass of what we can expect. Now let's jump into the NASDAQ composite, because this is a very important chart that we have right here, because what happened with the NASDAQ composite, and this is something that we were talking last week. If you haven't seen last week's video, I recommend you to see that video. Is a video in which I go deeply into my indicators and what were the divergences that we were watching. But just a little bit of a summary. In that last week video, you can see that we actually make a higher high in price, but the indicator was already making a lower high. If you want to see that explanation, I'm going to link that video in the description, and also you can see the link for that video already popping into the screen. But you can see that we had the divergence, and what is the importance about the bearish divergence? Basically, when we have a bearish divergence using the trend oscillator in comparison to the price action, is that when we have that higher price but the trend oscillator is going lower, that means that the move is not being supported by enough buyers. So when that happens, what we tend to see is a very intense sell-off, or we tend to see a failed breakout. And when we tend to see a failed breakout, if we understand the psychology of the market, is that any participant who bought the breakout is now trapped. That is what we tend to call a bull trap, right? So you can see that basically anyone who bought that breakout is now trapped. And all the people who bought the pullback, what happens with that people get basically all those stops get triggered to the downside. So when we get all those stops triggered to the downside, then we get the panic selling for all the people who bought the breakout, and that's when we tend to see this very intense move to the downside, which basically completely changes the pattern that we were expecting. So what is the expectation right now? The expectation right now that after the NASDAQ composite is considerably extended to the downside, the expectation is that we are going to see a reversion back to the mean. The reversion back to the mean in my trading language is that we're going to see a reversion back to the 21 daily exponential moving average. The 21 daily exponential moving average is going to be that light blue moving average that we have on the charts. And the reason that I watch that moving average is because that moving average is a very good indication of the short-term trend that we have in the market. So also something that I want to show you, if you follow Fibonacci, if you actually make a measurement from this high all the way to this low right here, you can see that the 1272 extension is right here near that very important level of resistance, which is 10,910.62. So if we happen to see any rally into this area right here, that's going to be an opportunity to start some short exposure. So you can see that we have the first leg to the downside. My expectation is to see that reversion back to the mean, so you can think about it as a rubber band. When the rubber band gets extended, we tend to see that it snap back all the way to the mean, back into that 21 exponential, back into that level of resistance, and then the continuation to the downside in the market, given that the indicators are also suggesting that we're gonna see more continuation to the downside. So that's basically what I'm gonna be watching for the NASDAQ composite, and you can basically see the same exact patterns in the S&P 500. You can see that the S&P basically had the same divergence, broke to the downside. The same extension is right here at resistance at 391. So the expectation is also a rally into resistance and a failure. That's gonna be the SPY. If we take a look at the QQQs, it's gonna be the exact same thing. You can see that we had the reversion, we have the drop down, we also have the extension right there at that level of resistance of 278.78. So the expectation is also a rally into resistance and then a failure, and it's going to be the same thing for the IWM as well. You can see that the IWM broke to the downside. You can see that we have the extension right there at 178, also the 21 exponential coming into resistance, so the expectation is a rally and then a failure, and so on. So that's basically going to be the expectation for the indexes. And one very important ETF that I want to show you is going to be the SMH. So why do I want to show you the SMH? Is because the SMH and the semiconductors is such an important sector in the market. And given that the rally that we had on November was led by the semiconductors, you can see that the semiconductors had a really immense move to the upside, but you can see that the semiconductors happen to found resistance at that 200 daily moving average. As soon as we had that, this seemed to be a level of accumulation, but of course, when you see it in hindsight, we now understand that this was actually distribution. Of course, we did had a little bit of an anticipation because we had some really wide ranges, right? So we tend to see wide ranges when we see distribution. We tend to see tight ranges when we see accumulation. So given the wide ranges, we can assume that this was distribution, but the most important thing about it is that we once again had a higher high in price, but the indicator was already making a lower high. That means that the breakout was not supported in the SMH. And when the breakout is not supported, the very important levels of support, which are the 8 exponential moving average, the 21 exponential moving average, and the 30-day simple moving average, which is the pink line here, these indicators, these levels of support have a high probability of failing when we have this bearish divergence in the chart. So that's exactly what happened when the semiconductors broke to the downside. Now we have a bearish squeeze. We also have a bearish trend oscillator. So the expectation is that any rally back into resistance, back into that 21 exponential, is gonna be an opportunity to get into some bearish exposure in the semis and look for more continuation to the downside. The first level of support that I'm gonna be watching is gonna be this open gap that we have after that first announcement in the CPI is going to be the first target. So the first target is going to be 193.97, and the levels at which I'm going to be looking to short is going to be this 210 level right here in the semiconductors. And then as I mentioned, I also want to talk a little bit about the TLT. The TLT is one of the setups that I tried to get into some bullish positions right here into the 30 daily moving average. I did get a stop as soon as we gap to the downside, and this is actually kind of the TLT, which is bonds. We tend to see these bonds trend ahead of the market. That doesn't mean that we're gonna see a exact correlation between TLT and the stock market. However, we tend to see bonds leading in a market cycle. By what I mean by that is that if this market is gonna bottom, the first thing that tends to bottom is gonna be the TLT. So I think that the level that we have to watch in the TLT is gonna be this 50 daily moving average. If this 50 daily moving average fails to hold as support, probably we're gonna see TLT retesting these lows right here, and of course that's not gonna be a really bullish indication for the stock market in general. So let me just finish the video with UVXY, and the reason why I wanted to show you the UVXY is because we have a really important divergence, and what is important to understand is that we saw a bearish divergence in the indexes, but in the UVXY right now we're having a bullish divergence. So that's the complete opposite. My expectation with this bullish divergence that we are seeing here, meaning that we're making lower lows, but this indicator is already making higher lows. That means that this move is not being completely supported by the sellers. That means that we have a high probability to see a little bit of accumulation in the UVXY. And when we start to see accumulation in the UVXY is when participants are starting to hedge because they anticipate something that is going to happen in the market. So as long as we continue to see this divergence, I think that maybe we're going to see a little bit of another leg into the downside in the UVXY, but my expectation is that these levels right here, somewhere around 650, is going to act as support, and then we're probably going to see a pretty explosive move to the upside in the UVXY. But of course, remember that right now the trend continues to be to the downside, but this is somehow a heads up of what we can expect in the market. So once again, guys, thank you so much for being part of the channel. Thank you so much for the support. Remember once again to like and subscribe, and also remember to follow me on my Twitter account @ValerisoCapital. And in that account, I share a lot of information related to the markets, also to market psychology, and I do share a lot of setups as I see fit every single day in my Twitter account. I'm gonna link that my Twitter account handle right into the description so you can follow me. So thank you so much, guys. Remember to have some rest and get prepared for next week. See you. Peace out. Bye bye.